ended it and did another one. My apologies. Go internet. All right. If you've got a question about rental property, I want you to comment it right here on the channel, and hopefully I will get a chance to give you an answer. So we're about to shoot our show, and if you want to tune in, I hope you do. We've got some interesting things happening today. And so let's get to it. Hi, I'm Josh. Welcome to the Tax.Pro show. I'm glad you're here. Today, we're going to talk about, I'm going to start over. Is your rental subject to self-employment tax? We're going to get into all the questions that you need to know to answer that one big question and why it matters to you. Welcome to the Tax.Pro show. I'm Josh, an EA with over 20 years experience, and I am glad you are here. Today's going to be a little bit different than what we've been doing, which is always fun. I've got Jackson jumping in, and we're going to go through first some minor announcements. So the first thing that I wanted to bring to your attention, if you're watching today, is we have started an insurance company called Blue Horizon Insurance, and I've got a guy running that for us. His name is Nate. And so if you need help with insurance or would like a quote on maybe property, casualty, anything regarding insurance, reach out to Nate. You can reach him at our main office by visiting our website, tax.pro, and just go to the phone number there. Next, the other thing I want to talk about is today, I'm not sure when this is going to air, but today we actually just closed on acquiring a new location in Pampa, Texas, which is about an hour down the road from Amarillo. Yeah, it's awesome. Woo! It's super exciting.
Let's go.
Yeah, man. It's going to be great. So at Pampa, we are very excited to have you joining us and our team, and we can't wait to serve you well. We've been in Pampa for a little bit, but this should turn on the afterburners, and we're going to get a lot more traction there in Pampa, which is awesome. Another thing, not directly related to the Tax.Pro show, is the Barkley Marathon. So I'm a big runner. My son Jackson's a big runner. My other son William's a big runner. And the Barkley Marathons just happened here on, February 14th, right?
Yeah, right? It happened not too long ago. So.
Yeah, so if you're not familiar, there's actually some documentaries you can go on YouTube and watch, and it's fascinating. It's a fascinating topic. The 2026 was pretty wild. So the race begins when Lazarus, the guy that puts it on, blows a conch shell, and he blew that at 5 a.m. on the 14th. And this year there were about 40 participants. The race has only seen 20 finishers in the 40-year history of the race. Wow. So it's one of the most difficult races out there, for sure. And it's made up of 5 different marathons, basically. And you've got 60 hours to complete them. This year you had to climb 60,000 feet. You had a 60,000 feet elevation gain in and over those 5 different marathons.
Yeah, I'm researching it here. There's something about like a book and taking out pages from, what is that?
Yeah, so every marathon, every loop, it's like 5 different loops. So every loop, you've got to rip a page out of a book, and you have to return the page to get the instructions for the next loop. And so if you don't have that page, that's how they know you've completed that marathon, basically. So if you don't have that page, then they're not giving you the next page to continue. This year, there were, of the 40 people that started, there were only 4 people that started loop 3. Of those people, one of the guys actually, these trails are like super treacherous. They're not even really trails. They're just kind of just wildly out there. One of the guys, Damian Hall, actually lost his shoes on the second loop and started the third loop with no shoes. And
it looks brutal. Like the pictures of there's just bloody legs. It's insane.
It's insane. It's truly brutal.
Yeah.
So what happened was 2 guys got onto that loop, and they just basically turned around onto the third loop. They just turned around because of the rain and the storms and everything that was going on. They bailed. The other 2 guys tried to continue to finish the loop, but then they also had to turn around and come back because of weather. So I know you may not be a runner, that's fine, but this is a crazy, crazy race, and you should definitely just look it up. It's wild. So no finishers this year. And there you go. They have a certain amount of time, and if they don't meet their cutoff window, then they're basically out.
Has anybody finished ever?
20.
20.
In 40 years, there's been 20 people that have finished.
Dang. 4 years, huh?
In 40 years,
40 years.
There's only been 20 people to finish. What happened was a few years ago, the course got easier. And like 1 year, 7 people or something, 9 people finished. And so after that is when they were like, the guy that puts it on, Lazarus, was like, no way, man. I'm making it harder. And nobody's finished since.
Wow.
So,
Impressive.
crazy. We've got a lot of cool things coming up. If you've not seen some of our past videos, you should definitely check them out. One of those is, what if we abolish the IRS? Check out that one. Another one is hidden taxes. And these are mind-blowing episodes. You're going to get to see a lot of hidden taxes and things that you're not going to normally be aware of. So, with that, we transition into this whole debate. So first, let me just kind of set this up. What is this debate? And why does it matter, right? So, it matters because they're taxed differently. If a hotel is taxed differently than a residential rental property. And we're hoping to kind of get into that and dispel so you know how you should be paying taxes. We see returns all the time that come in and they're not being treated properly because people, even accountants, don't know the proper treatment or even the right questions to ask. So let's get into it.
So what's the difference between a Schedule C and a Schedule E? Because it seems like these are two categories that maybe get confusing amongst a lot of people.
Exactly. Yeah, I know that you're exactly right. So when it comes to the difference between Schedule C and Schedule E, it is a big deal. There is a big difference between those two. Here is the big difference. Schedule E, if you've got a loss, you're limited on your losses. Schedule C, you are not limited. Also, when it comes to depreciation, there's a difference between those two schedules. I don't want to get too technical. The main difference, though, other than the losses, is the Schedule C.
Hey, Brittany, your head.
Yeah, you got in the way of the camera.
I'm trying to read. I was like,
Hey, that was Brittany.
I was like,
Leave that in. Don't edit that out.
No, yeah, leave it in. That's great. That's awesome.
There are other people in the studio with me today, so
Yeah,
that was
yeah.
Brittany. She's awesome. You got to
Anyways,
see her head.
the difference between Schedule C and E, you're talking about limited, gosh, what were you talking about? You're talking about.
I'm talking about the taxes. So first is the losses, right? Schedule E, you could have potential losses. Schedule C, you're not limited on your losses that you can take. And those losses matter because you're taking them against other income, like W-2 income or business income. Whenever it comes to another major difference between these two schedules is when you file a Schedule C, you're going to have this thing called self-employment tax, or SE tax for short. And that's critical because that's an additional 15.3% that you're paying into Social Security and Medicare on the earnings. So a Schedule C, think SE. A Schedule E, think no SE. It's truly passive income. And that's the difference.
So what are the tax differences? Like, are you taxed at different percentages with SE and just passive income?
Yeah, so active income is subject to Social Security tax, and passive income is not. So, for example, let's just think about very simple terms that you're familiar with. Interest income that you earn in your bank account. Did you do anything to earn that money? No. How did you earn that money? Well, your money earned that money. The money was working for you. You weren't working for the money, right? So in that case, the interest is passive. That's passive income versus your W-2 job. Your W-2 job, you're going out and you're working for that money. You're actively doing something to earn the money, and that's called active income active income is subject to SE tax or Social Security tax, Medicare, FICA, those are terms for wages. And the money on the interest income is not, because it's truly passive. The money earned the money.
I gotcha. I get what you're saying here, as far as passive income and not passive income. What does time play a role? Because it seems like a W-2 income, your time helps you increase your W-2 gross wages. So in a sense, whenever it's your time does not play a role into it, like you're just getting, your money's making money for you. You don't really have very much into that. Like, is there a difference between those two?
Well, I
Or
mean,
am I stepping too far into it?
yeah, on the tax side, technically, I would say they both are time, because interest is made off of use of your money, which is being compounded by time. And then you're
Okay.
selling your time with active income, where you're actually selling your time. But not for taxes, it doesn't really, it's not really a big factor. When we're talking about this, there is an IRS test that may play a role in if the IRS is trying to determine whether it's active or passive. But I don't really think that matters as much. That the IRS is going to say, well, we're going to look at the average length of stay. Hotels generally short. A residential rental is generally long. Sure, we could look at that. There is no written rule specific to that test. I hear it come up a lot. Really, I don't think that's the big test, though, to answer the question.
Okay, so the numbers of days have to do whether you report your income on Schedule C or E. How does that factor play into it, essentially? That's what I was kind of going with time-wise. Like, what are the number of days of the stay? Does it decide whether it's Schedule E or C?
I don't think so, no. I mean, that's what I was just saying. I really don't
Okay.
feel like it plays that big of a deal.
Gotcha.
Yes, there are people that would argue that it does. I have not found that to be the deciding factor.
Okay. So how do services provide effective effect to how income is reported?
Yeah, so I think that is a much bigger deal. The services you provide are critical to whether or not it's a hotel or like a residential rental or Schedule E. So Schedule C or Schedule E. Hotel's going to be on Schedule C. Residential rental's going to be on Schedule E. Why does that matter? Well, let's think about a hotel. When you go to a hotel, there's somebody at the front desk to greet you. There's common area. There's a common foyer. There's a common dining area. There's a common hangout area. They have generally a common office area for business. They have a common gym. They have a common pool. They have a common parking lot. They have a lot of commons. If you're renting out property personally, you can ask yourself, do we offer a lot of common areas for everybody that's renting from us to go hang out? And if the answer is yes, then you're leaning more heavily towards a Schedule C. If the answer is no, then probably not. What about other services, right? Do you go into your residential rental and pick up their trash every day or clean every day like a hotel does or a motel? They go in there every single day. The cleaning lady's coming in, housekeeping, and they're going to go in, they're going to clean it, they're going to change the sheets, they're going to make the bed. Are you doing that on your Airbnb? Are you doing that on your residential rental? If you are, then that's a hotel. If you're not, then it's not. How about like concierge or meals? That's another one. Meals. Are you cooking breakfast for them, or are you not? You go most hotels you go into, they're going to serve breakfast, or they're going to have a place you can go order breakfast, and that's, in my opinion, a very big difference between, and not just my opinion, but in tax law's opinion, that's a big difference between whether it's passive or active. You can see the difference. Active, you're actively cooking breakfast. You're actively picking up the trash. You're actively going in and cleaning every single day. You're actively providing services with the stay. Passive, you're not. You're cleaning when they leave. You're taking the trash out when they leave, not every day. You're not cooking breakfast for them. They're going and cooking their own breakfast or going to a restaurant and getting their own breakfast.
So are there more tax perks and benefits for the taxpayer if it's paid? It, like if I wanted to, like, I guess I'm trying to ask, why would anybody want to classify their Airbnb on a Schedule C? Is it beneficial to them?
Yeah, it's a great question. So the reason that it would potentially benefit them, the upside, is they could take the loss against other ordinary income with no limits on the loss. You're limited on Schedule E. You have no limits on Schedule C. The downside is, once it becomes profitable, then we're going to pay income tax as active, subject to self-employment tax. And so IRS could argue both sides of this, right? Let's say you have a short-term rental and you classify it as a Schedule C, but then they come in and they say, well, you don't have common areas, and you take a big loss. And then they come in and say, well, you don't have common areas. You don't have, there is no common areas. You're not providing substantial services. So why do you think you have the right to this loss? And then they could reclassify it as Schedule E.
Yeah. I'm kind of joking, but this would be funny if they were like, what we're going to do is we're going to put in an office in our Airbnb to make it like a
common area?
Yeah, so they could classify it as a...
If you got 5 Airbnbs and then what you do is you have one common office in one of them and you give everybody the one key,
yeah.
it'll be fine.
And then you have different families come over, so it's like...
They all hang out together.
Yeah, it's like... Yeah,
You're working really hard to put it on Schedule C.
Yeah.
Yeah, it's not really to the advantage to be on Schedule C. I know a lot of people want it to be on a Schedule C because they want to take the loss against their other income, but it's generally not the way to do it.
No, yeah, especially from how you explained it. It seems like it's really dangerous if it becomes more profitable in reporting it to the IRS, because you don't want to be, you want to stay in compliance, and doing that is not very compliant as you grow.
Yeah, for sure.
No, that's great. Looking at here, what other questions that I might have for you? I don't know.
Did you send him more questions?
He has one more he hadn't asked.
Oh, if I provide, how do services provided affect how the income is reported? I already asked this question.
No, you didn't.
I didn't.
Mm-mm.
Are you sure?
Yep.
Okay.
No, maybe you did.
I think I did ask that
Maybe it's
question.
this one.
If I provide a breakfast, does it change?
No, we already talked about this one. It's this one.
Okay. How does it matter who provides the services at the rental? How does that?
Do it. Ask it one more time.
How does it matter who provides the services at the rental?
Just read it for what it says word for word.
Does it matter who provides the service at the rental?
Yes, it does matter, because if you're hiring somebody that provides the services, then that could make it passive, even if you are providing substantial services. So it does matter who provides the services. If you're going in and you're personally providing services to that Airbnb, and you're going in and you're cleaning it daily and you're doing all the stuff, that may change the answer versus if you're hiring a company that's doing it. The difference is one of them you're working for, and the other one your money is working for you.
Gotcha.
Okay. See if there's anything else.
I think we covered a lot of it. So really, it's like, the danger in putting it into a Schedule C, a rental into a Schedule C, is if it becomes more profitable. Or no, I'm sorry, if it takes losses. Is that right?
So, no, I mean, it could be both, right? So if it has losses,
Either or.
and then you're not allowed to take those losses, then that is gonna potentially create a problem with IRS, right?
Okay.
Because they may say,
Yeah.
hey, your losses are actually limited, you're not allowed to be on a Schedule C. The flip side of that is if you're profitable, or when you're profitable, because hopefully you're doing this to be profitable, you're not doing it for a loss, right? We don't go into business for losses. If we just want to lose money for a tax write-off, then that is real dumb. You're better off just paying the tax. So it should be an investment, and we should expect a rate of return. So if we're doing that and it's a business and we're getting a rate of return at some point, then we're gonna pay more taxes on that rate of return if it's on Schedule C, subject to SE tax, versus on Schedule E, rental.
Should we talk about entity structure? Like, should you form an LLC, an
We
S
can.
corp?
Yeah.
Mhm.
Yeah, so I will tell you this, generally speaking, you wanna be real careful with entities around, or actually, maybe have Jackson ask the question and then we'll circle back.
Yeah, say, what do you recommend in terms of structuring entities?
I'll just say, it, yeah, entity structure. Yeah.
So what do you recommend with entity structuring, over rentals, or your Airbnbs, or how do you go about that?
Try again, make it more simple.
Okay. So how do you go about entity structuring with this?
Yeah, so this is definitely where you want to pro, because I would argue in some cases it could be considered malpractice if you put rental property in the wrong type of entity. So you want somebody that knows what they're doing, then you want somebody in your corner that actually understands the difference between the entities and how they're taxed. And this is very important. Yes, you can set up an LLC, but then the next question is how's the LLC taxed? Because LLCs are just seen by the state, they're not seen by the IRS. And then we can choose how they're taxed. So in general, we don't want to put real property, which is either residential, commercial, any kind of real property, land, in, from a federal tax standpoint, we do not want it in an S corporation, generally speaking. We don't want it in a C corporation, generally speaking. Those are the two that we want to avoid. So disregarded is generally fine, or a partnership is generally fine. But we want to be careful how and what we actually put it into. You can be okay in an S corp, certain circumstances. I probably would never put it in a C corp for many, many reasons. However, I have helped people in that situation and helped them be okay getting out of it. But it can create a trap in a C corp for sure.
Perfect. How about, we talked about income classification, all that is great. What about deductions?
Yeah, for Airbnb and rental?
Have we gone into deductions at all?
Not on this episode. We have in the past.
Yeah,
So, I mean, we can definitely talk about
I think it's super relevant. So in
what
other words,
deductions.
what differences in their Schedule C and E, but, or in general, just with rentals, are they the same?
So what do deductions look like for Schedule E if you've got a rental?
Yeah, so generally it's going to be anything ordinary and necessary, and that's going to apply to either Schedule C or Schedule E. It's not like you get more deductions on one of the others, one or the other schedule. The same deductions are available for the property regardless of what schedule it's on. A lot of it just goes back to record keeping. So things that you can deduct: your insurance, your interest expense if you have a loan on it, your depreciation, not on the land but on the building or any land improvements. You can look at any kind of supplies, cleaning fee, pest control, telephone, internet, utilities, taxes, property taxes, sales tax if you're required to collect it, hotel tax if you're required to collect and remit it. If you've got like Airbnb and you're paying them fees, those are deductible, or VRBO, those fees are deductible. If you're paying for repairs, maintenance, Any kind of thing that you have to replace, like say you have to replace the roof, then you can depreciate the cost of the new roof over the life of over the depreciation life of the roof. So yeah, there's a lot of deductions, and it doesn't change the deduction as far as you don't get more deductions on Schedule C versus E. You get the same deductions on either schedule because they're both considered businesses.
Love it. Ask him a couple things here. And this is what I'm kind of want to do is a stream of questions. He got into depreciation. Say, hey, what is your depreciation strategy? There's a lot of thoughts out there. There's cost seg stuff, which we get a lot of questions about. Give us a depreciation strategy overview. And then after that, on TikTok especially, and other social media, we should definitely roast it, make fun of it. I don't know, in my opinion, which I'm excited to hear from the pro. The short-term rental loophole is everywhere, where it's like high earners can use it to have losses offset their W-2 income.
Oh, okay.
That whole deal.
I thought you were going to talk about Augusta rule.
No, that too, though. That's another one that's out there. So depreciation strategy, and then the short-term rental loophole.
So as far as depreciation strategy, what do you recommend?
So we have a lot of options with regard.
Oh, hold on.
Something's wrong. We have a malfunction. If you're live on YouTube, if you look deeply into your phone, you can see behind you. There's a problem. I don't know if the battery died.
Where it just might be the government saying we don't want you to have a depreciation strategy.
Ooh, the government saying, that's the one I like.
Yeah.
No depreciation for you.
We can also talk about like
Give us 1 second.
as far as snacks goes, like if I'm going to be really hospitable, and I have a rental, and I'm going to provide snacks for
For your Airbnb?
yeah, or I mean Airbnb is like sounds reasonable, but even like for a rental, can you deduct that?
You could, it would be weird.
It
It's
would
like,
be
it's your
weird.
Tuesday snack day.
Probably would be weird. I don't know.
I think it'd be weird.
Yeah, probably.
Battery is dead. It's plugged in. I don't know why the battery's died.
Gotta love the technical difficulties. Do we have another one?
We do not. Need to get one.
Yeah, I was say we need to put that on the list.
Yeah. Because it's a plugged in, it's a powered thing. So,
Do you think if you pop the battery out entirely it'll work or no?
no, it has to use the battery,
Okay.
but it's plugged in. The problem is that it was left on while this whole power thing was powered down, which is my fault.
Oh, I got you.
So it was running at low power this whole time, even though it is plugged in, it kind of overwhelmed it. It's kind of like running at 10% while you're recording video. Even if you're plugged in, it'll
Still
still
kill
drain it. Yeah.
Mhm. I got it.
So
Well, it's not like we have nothing going on. For those of you that are tuning in live here, this is tax season and we do taxes for a living. So it's a little bit busy
very busy.
around here. And speaking of, if you need tax help, man, we'd love to take a shot at helping you. So I would tell you just to hop on our website, go to tax.pro. I'm gonna use this moment for live to just make an advertisement. Yeah, I would tell you to go to tax.pro and you can schedule an appointment there if you want to talk to one of our solutions team members. They're gonna help you see if we're a good fit. And then beyond that, I would say you can, if you just don't care and you know you're a good fit because you're super cool, you can just go to our start page, which is tax.pro/start, and you can start your return today, and you can start uploading your documents, and we'll actually start processing your return. Believe it or not, we'll keep you out of jail.
Straight to jail.
Straight to jail. Straight to jail.
See if we had any questions coming in.
Did we lose that content or?
No.
That
Battery
would
just
be-
doesn't want to charge.
That would be tough.
We can end for, take 10 and,
Sorry, it's my fault, man. I'll get a battery. I'll get a backup battery.
so
And
we want to just end for today, for now, and then give it 20 minutes and we'll.
Yeah.
Okay. We want to end the live feed.
Do that.
I can't reach it. Hey, thanks for tuning in. Appreciate you guys. Sorry we had technical difficulties today. We should be back next week, and be watching for this episode to drop in the near future. Later.